wait and see what they do rather than jump ahead of time. The market's done well here going into the Fed decision, like global markets have. And I think what you said, the fact that will the Fed indicate a downshift? 75 basis point today, of course, is a given. I mean, we'll get that. It's at least priced, and if you get 50, great. But if you get 75, it's not positive or negative. But what after November, which is today's meeting in December, is there a potential downshift? And if there is a potential downshift, which is that they say, well, it's not going to be 75 every time. We may decide to do 50 based on data. If they leave the door open, room open, the question really is how much is priced in. And I said this yesterday that the market's done well. The S&P, for example, is up 10% in the last 13 trading sessions. It's done a fair bit. Real yields are down in the US. The dollar has come off quite a bit. VIX has been falling for many sessions in a row. So all in all, I mean, financial conditions in the US have eased quite a bit with this rally that we've had. One view is that, we heard at the Jackson Hole Summit or the September policy, the Fed will want to err on the hawkish side. I mean, why should they sort of let their foot off the pedal now? Why not wait to see that inflation actually is coming off, there is slack in the economy and things like that before indicating anything conclusively? And I think that makes sense. So given the fact that the market has rallied and given the fact that the proclivity of the Fed has been to err on the side of on the hawkish side, I think the market positioning out of the Fed the risk is skewed towards the hawkish side because of the rally and because of what the Fed has done in the past as well. So have that in mind as you trade. I mean, if you're a very near-term, short-term trader, I think these things become pretty important. We, of course, have the RBI meeting tomorrow. It'll be interesting to see what they say, what they have to say about inflation, whether additional measures are needed. I don't think this is a meeting, as has been widely discussed, about rates or having a rate decision. But that, again, is important. That's an MPC meeting tomorrow morning. Nifty momentum here remains pretty strong. There is absolutely no question about it. And I think, with data like what Sonia mentioned, the auto numbers, PMI numbers, high-frequency data still indicates that the economy is still in pretty good shape. So the momentum is strong, but there are these sort of things to navigate, the Fed and additional things that we've highlighted. Jobs report, for example, out of the US on Friday. So maybe keep an eye out on support levels as well. On the Nifty, support stand at about 17,965 and 17,858. This is on the downside. We got to 18,100. We got to almost 18,200 as well. And I think a move to 18,300 cannot be ruled out if, there is no reversal. Just watch out for FI long positioning as well. In index futures, FI long stand at about 45,000 contracts, a little over 45,000 contracts as of yesterday's close. At about 50,000, 55,000 long contracts, in the past, many occasions, the Nifty has topped out. So we'll track this. We'll sort of let you know when this is pushing to those zones day after day. But I think this is something which one needs to be watchful about as well. For now, I think, as has been the case, the market is indecisive in a wait-and-watch mode with a 30-odd point downtick on the SGX Nifty.